$1.2 trillion dollars in a single quarter? That's a face-melting number.
Face melting? Sure, until you look at the footnotes. Total deal volume is actually down 17%. It's mostly just SpaceX buying xAI for $250 billion that's skewing the math.
Oh, come on, you can't dismiss a $250 billion transaction just because the buyer and seller share a family tree.
I absolutely can, but if you strip out the Elon anomaly, the real story this quarter is who's quietly pivoting away from megadeals entirely. The rundown.
$2 billion for cake, Maya? $2 billion.
Have you had the red velvet? It's really good cake, Nate.
I'm not saying the cake is bad. I'm saying KKR writing a $2 billion check for Nothing Bundt Cakes is peak private equity, having way too much dry powder.
You're ignoring the franchise model. The margins on those frosting petals are insane.
Spoken like a true spreadsheet jockey. Speaking of massive checks, Intel is buying back a 49% stake in their Ireland fab joint venture. $14.2 billion to reverse a deal they basically just did.
That one actually makes sense to me. The big one. $1.2 trillion in a single quarter. I had to refresh the terminal 3 times because I was sure the comma was in the wrong place.
First quarter of 2026 is officially the biggest M&A quarter on record. And we did it on pure brute force. The banking sector is calling this a throttle up moment.
I hate that phrase. Throttle up. It masks what is actually happening in the data. If you look at the actual deal count, the overall number of transactions dropped 17%. The middle market is completely stalled out. This $1.2 trillion is a mirage created by a handful of massive consolidations.
You can call it a mirage, but the scale is undeniable. And you mean it was created by one specific behemoth? SpaceX buying xAI for $250 billion.
$250 billion. For an acquisition that is basically Elon negotiating with himself in a mirror. They share a CEO, they share investors, and they share a cap table.
The ultimate left pocket to right pocket transaction. But you have to admit the strategy is brilliant. The race for compute is so intense right now. You need the rocket company's massive balance sheet to fund the AI company's data centers. He is building a sovereign state at this point.
Oh, come on, Nate. You cannot possibly justify a $250 billion valuation here. What are the revenue multiples? It is completely absurd. It is pure paper math. They are just stacking private equity from one silo onto another to create a synthetic mega cap.
I am not saying the multiple makes sense on a traditional discounted cash flow model. My old banker brain knows the math is fuzzy. But in an AI arms race, price is entirely secondary. US deals over $1 billion are up 319%. Financing is cheap again, regulatory approvals are moving faster, and these guys are terrified of losing the AI war.
You know who is definitely not terrified? Sullivan and Cromwell.
Oh, they are throwing a parade right now.
They just vaulted to the absolute top of the global deal-making rankings almost entirely because they caught this one incestuous transaction. Can you imagine the billing hours on a $250 billion related party deal?
The fairness opinion alone probably bought 3 partners and new houses in the Hamptons. But whether it is paper math or not, this deal changes the gravity of the whole tech sector. If xAI is worth $250 billion inside SpaceX, what does that do to the rest of the market?
It breaks the thermometer, which is exactly why I am frankly more interested in deals where actual cash is changing hands for tangible things.
You mean like silicon fabs? Because Intel is spending $14.2 billion to buy back half of its Ireland joint venture.
No, I mean actual tangible things you can eat. Because while Elon is playing master of the universe, KKR is out here dropping $2 billion on cupcakes.
Wait, they actually signed the Nothing Bundt Cakes deal?
$2 billion for premium frosting, Nate. We are absolutely talking about this next. Voices.
I am reading this note from a major desk this morning calling Q1 a quote, throttle up moment for capital markets. They are pointing to a 319% surge in billion-dollar US deals. 319%.
I saw that note, and I hate the phrase throttle up. It sounds like a bad energy drink. But they are claiming this is all because of eased regulatory uncertainty and better financing. I completely disagree.
You don't think debt is cheaper right now?
Sure, debt is marginally better, but a 319% spike? That is not a financing story. That is pure unadulterated AI panic. You don't drop 250 billion on xAI because the FTC might approve it faster. You do it because you are terrified of being left behind.
Okay, fair. The AI race is the engine, but the regulatory window being open is the paved road. You cannot deny the approval timelines are shrinking.
I can, and I will. Because while the tech guys are playing Monopoly with fake money, look at what the consumer sector is doing. The actual smart money is quietly backing away from megadeals. Look at Unilever.
Oh, the whispers about them hunting in India?
Exactly. They are completely shifting strategy. No more massive targets. They are picking off small, high growth, digitally native premium brands in the US and India. It is surgical.
Surgical is boring, Maya. I want the drama. Give me the Estee Lauder and Puig rumors.
Wait, a massive, predominantly stock based merger? You actually buy that rumor?
I do. A giant European luxury house and a legacy American beauty brand slamming their portfolios together to fight L'Oreal. It is the corporate equivalent of an arranged marriage. The vanity alone makes it plausible.
A stock based beauty merger sounds like a valuation nightmare. I would love to read those footnotes. But speaking of companies trying to buy a premium glow up, we need to talk about what Uber is doing tomorrow. Spill the tea.
$2 billion for cake. I just cannot get past it.
KKR knows exactly what they're doing. People will always buy overpriced frosting for office birthdays.
Nothing Bundt Cakes for $2 billion. I spent a decade in banking building complex financial models, and I never once pitched a Bundt cake roll-up strategy. I feel like I wasted my youth.
You absolutely did. But if you want real corporate drama, forget the bakery aisle. Look at the beauty sector. The whispers about Estee Lauder and Puig are getting very loud.
A predominantly stock-based merger, which is wild to me. Estee Lauder has had a brutal run in the markets lately.
Exactly. I read that rumor and immediately thought, if I am Puig, why on earth am I taking Estee paper right now? Their margins are under pressure. Show me the cash.
See, I actually disagree on this one. I think it is a brilliant play for Puig.
Oh, come on. You just like the prestige factor.
Hear me out. You take the Estee stock now at a massive discount. You inject your high-end fragrance portfolio into their global distribution machine and you ride the turnaround upside. It is a classic buy low maneuver.
That is a huge gamble. Turnarounds in legacy beauty are notoriously messy. I much prefer what Unilever is doing right now.
Snooze a fest.
It is not a snooze fest, it is disciplined. They are officially backing away from megadeals. They are just quietly hunting smaller, high-growth premium brands in India and the US. Digitally native stuff with actual growth metrics.
Sure, disciplined. But it lacks cinematic flair. I want the vanity plays. I want clashing executive egos over who gets the corner office in Paris.
You just missed the massive advisory fees on megadeals.
Guilty as charged. I am a simple man, Maya.
Well, if you want premium vanity plays, wait until you see who is trying to upgrade their fleet.
Are we talking about Uber? Because those Blacklane acquisition rumors are supposed to drop tomorrow. Tomorrow's radar. I'm keeping my eyes glued to the SEC site tomorrow morning for the Apollo filings on Gatehouse Living.
You really want to read UK real estate footnotes at 6 a.m.
It's the poetry of my people, Maya. But fine, if you want something sexier, Uber is supposedly finalizing the Blacklane deal tomorrow.
Which still makes 0 sense. Uber already has Uber Black. Why buy a premium chauffeur service? Just to own the guys in suits holding iPads at baggage claim?
Because margins. Blacklane has corporate accounts locked down. It's a pure B2B play.
I'll believe the synergies when I see the term sheet.
Fair. Also, on my radar, whispers about Estee Lauder and Puig talking about a massive stock-based merger.
Oh, come on. Puig just went public like a minute ago. I'm highly skeptical of that timeline.
I know, but bankers need to eat. Speaking of eating, KKR is supposedly dropping $2 billion on Nothing Bundt Cakes tomorrow.
$2 billion for frosting. Private equity is officially out of ideas.
Or they just really like cake. We'll see who's eating their words tomorrow.